Hey, Eric here from 5minuteinvesting.com and welcome back to my YouTube channel. So today I want to answer a question, and right now we're in 2020. Is value investing dead in 2020? And I think this is quite an important and interesting question because recently we have been seeing a lot of proof on whether value investing is dead or not. And just for your information, I've been investing using a very strong component of value investing for the last 4 years, only for an hour a week, and it is working out pretty well so far for myself. Now, let's take a step back and understand what is value investing. Like, what is this supposed to do? Now, value investing, for a lot of people, it's about analyzing financial statements. And it's about looking at a very thick financial report and getting an understanding of the financial performance of the company. If we take a step back, it's about understanding the financial performance of a company. So it's pretty straightforward, right? Now, a lot of people think it is dead because it is not useful. People think that you can't find stocks that are undervalued. People rather invest in stocks that have momentum instead of undervalue because obviously it's harder to find these recent years, and so on and so forth. Now, I just want to talk about a couple of cases that I have written down here on my notebook on why value investing is not dead. So right now is January 2020, and if you look at the news, there is a lot of layoffs. And it's mainly from startups. It's from Zoom, it's from Oyo, it's from Scooter, Lime Company. A lot of layoffs around the world. And why is that? If you read a little bit deeper into the news, you'll realize that startups have been trying to become more profitable. Previously, startup is all about gaining market share. Startup is all about sacrificing profit today so that they can get market share, achieve some sort of monopoly, and then jack up the prices later. But because of the economic slowdown, because money is tighter now, it is actually more difficult for a startup to raise funds, so they need to demonstrate that they're profitable. So what do? They cut headcount. They reduce their costs to try to become more profitable. So when you're looking at headcount, is really a key driver for costs. And by cutting headcount, the goal of the startup is to become more profitable. All right. So if you look at and you zoom out on a stock chart and you look at a stock, the fundamental driver of the stock price is not technical analysis. It's not news. It's not insider buying or not. It's actually fundamental analysis. And it's actually whether the company is doing good or not. It's actually whether the company is making money or not. That's why right now there's such a strong focus on profitability, net income. And when you are investing in companies that have a negative net income, the fluctuations you see in the stock price itself will be a lot higher, and it will be a lot more unpredictable. Now imagine I have a stock portfolio of 10 stocks, and one stock is making a lot of profit, and one stock is making very little profit. And if, things go south, which one am I going to dump first? It's going to be the stock that is making a loss. So for the same reason, you're going to see more fluctuation for stocks that have a negative profit than a positive one. So when I'm investing in the market, I always have a rule that I focus on stocks that have a positive net income. And when I invest in stocks that have a negative net income, usually the fluctuation is way more than I expected, and that leads to a higher likelihood of loss. And it is quite apparent when you are looking at some of the IPO startups today. And if on the other side, if you look at companies that are making profit, another company I have on my list is Boeing. And recently there are 2 plane crashes for Boeing. It has been almost a year now, and there are issues with the Boeing planes and going through FAA inspection. But if you look at the stock price, it's actually flat instead of going down. And that's a very interesting observation because as you can see, there's so much bad news around Boeing. There's so much negative news and people canceling orders, weak demand, and so on. But Boeing's stock price is still holding up at around $300 something. And that is really because Boeing itself is a very strong company. It is profit generating. So when you look at these factors combined together, it holds on to the stock price. So when you are investing in the market and you are trying to use your hard-earned money to make a profit from the market, you want to select your stocks and you want to focus on stocks that are making, a positive income. If it is making a negative income, you want to be very, 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 very careful because the fluctuations are usually way more than you expected. And that's really what I teach. I have an investing coaching program called Investing Accelerator, where I teach people how to invest in the stock market long term and multiply their profit, target 30% from their portfolio using around an hour a week. And the program is called Investing Accelerator. And if you want to learn more, you can click on the link below. The first link, how to get 30% in 12 months, and watch that free webinar. And if you want to talk to me in person on the phone about the program because you have some questions, you can click on the second link below to schedule a phone call to chat. And if you want to try one of the modules, you can actually click on the free chart course to try one of the modules within the program. So that's pretty much it. If you enjoyed this video, you can click like, comment, or subscribe, and then let me know what else you want to see on my channel.